I'd been on a plane 4 times in my life before starting the company and land in Lagos, Nigeria on a 6-day-old passport, no visa, no shots, and a one-way ticket that we spent all of our money on.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Chris, thank you so much for joining me today. Super excited to chat with you. All right, Chris, you're the CEO of YellowCard. YellowCard is a stablecoin and payments infrastructure company built for emerging markets. You guys are live and operating in over 40 countries. I believe you guys were the first licensed stablecoin on and off ramp for the African continent. And you guys have now expanded from not only Africa, but also South America. And then any other continents we should mention?
You got to do all of them, baby. That's all continents are equal, man. That's everyone except Antarctica. We don't do anything for them.
Really? Actually?
No, I mean, so we're doing Africa, South America, Southeast Asia, and then parts of Europe.
You need to update your LinkedIn. Just at Africa. So I want to hear it all.
There's a lot on my LinkedIn that is out of date. So that does make sense. Yeah.
Cool. All right, Chris. Well, you went from, according to your LinkedIn, and hopefully this is accurate, but in college, I believe you were buying and selling Pokemon cards. So I know that's not, super on point with stablecoins and whatnot, but could you tell me about that experience? Because obviously being like an early entrepreneur, there's lots of entrepreneurs early on that were involved in kind of internet hustles, if you will, and selling Pokemon cards is like definitely one of them. So like, tell me about that experience growing up in selling Pokemon cards.
Yeah. So, I mean, I that started back in 5th grade. And then that is, I mean, essentially what I did up until doing YellowCard, right? So, look, man, Pokemon cards are the original store of value, right? You're out on the playground, no cash is going to be accepted. You need to be slinging Charizards if you want to get your way, right? So yeah, I mean, essentially, you talk about like an internet hustle, right? I would essentially just arbitrage between different websites, right? So, you buy it on Craigslist, sell it on eBay, and, make your money in the middle, right? So, yeah, I mean, that was essentially what I did, to make money throughout, throughout high school and then into college. And, what I will say about it is I was probably 10 years too early. I don't know if you've seen the market for this stuff, but once Jake and Logan Paul, those guys got into it and the YouTubers started getting involved, man, that market 1000x'd. So I should have just held.
Yeah. Yeah. I think it was during COVID, I think when that went really crazy. But maybe you were the reason why the market was so stable. Like you were the one keeping the prices stable because you were so efficient, and maybe it's possible.
We run an efficient game here, man. That's
Did that love of Pokemon cards, is that what brought you into Bitcoin, or how did you discover Bitcoin? Because you mentioned before you actually discovered Bitcoin, got involved in 2013. So how did that start?
Yes, yeah. So no, that it was completely unrelated to Pikachu. So my co-founder got into it in about 2012. So he is, the guy that would be scourging Reddit forums and everything back in the day, right? Very, how do you say, attuned to new technology and sort of everything going on. And so he's the one that introduced me to it originally. That was, I guess 2013 now. And so, about 2 years in, I was fully down the rabbit hole, right? Like, this is the best thing ever. This is what we're doing. And so Justin and I tried a couple of things in the States. None of them worked. Most of them were hilarious. And that's when we got involved.
So you're talking about Bitcoin and how you guys were, or he taught you about Bitcoin. And then from there, you guys were trying different companies, different hustles. And then I assume YellowCard was spun from that point. Is that accurate?
Yes. Yeah. Sorry. I wanted to ask, do we want to go right into like the Africa stuff?
I think just hearing the evolution of how YellowCard was like, going from knowing about Bitcoin to starting YellowCard, I think it would be pretty cool.
Sick. Okay. Sorry, you want to tee that up again?
All right. So did the Pokemon, kind of, buying and selling and the activity there, is that what led you to learning and diving deep into Bitcoin? Because you mentioned before that you actually got involved in Bitcoin in 2013.
Yes, yeah, no. So completely unrelated. Pikachu did not introduce me to Bitcoin as much as I would love to be able to tell that as an origin story. So my now co-founder got me into the space, right? So he's the guy that was scourging web forums back in the day, right? Always up to date on the new technology, all of that. And so, I mean, he'd walk around college parties just talking about Bitcoin, right? Just evangelizing the gospel. I mean, he's about 6'7", very sweaty. He'd have, six people at a college party, arms spread wide, just sermon on the mountain Bitcoin. And that's what got me into the space, right? So that was back in 2013. By 2015, I was just fully down the rabbit hole, right? Like, this is the best thing ever. This is what we're doing. We tried a number of things in the States. None of them worked. Most of them were hilarious. And that's when we met a guy at a Wells Fargo, right? So, what we landed on was we were going to put a gift card in CVS, Walmart, things like that, right? You'd walk and buy this gift card, redeem it for Bitcoin, which I still stand by as a great idea. And we were building this out, and one day, Justin and I are at this Wells Fargo in Auburn, Alabama, the capital of innovation. And this guy was sending $200 to his family, and the bank charged him $90 to send $200 to Nigeria. And I thought, well, that's crazy, right? So I talked to this guy. Hey, have you heard of Bitcoin? It's free, it's instant, it's fun, all this great stuff. And went home and just started thinking, what's this guy's mom going to do with $200 in Bitcoin? Like, you can't buy food with that. You can't pay rent with that. And everybody in this industry, I mean, as you know, right, we all love to talk about all the problems that we solve, right? That's, so you hear all the time about, changing the world and making money move better and all this. And like, here's a real guy with a real problem. What's this doing for him? Right. And so I don't think I knew where Nigeria was on a map at the time. They don't teach you nearly as much about Africa as you might expect in the Louisiana education system. Now, I know that might come as a surprise to you, Andrew, but it is true. I just, I wanted to learn everything that I could. Right. So I started doing all this research and trying to understand the country and the currency and the continent and the banking system. And, while doing all this research, I realized if I want to understand Nigeria, I need to speak to somebody from there. And so I put out an ad online that said, looking to speak to Nigerian men, which, in hindsight, probably could have been worded better. But I did get exactly what I wanted, which was my DMs full of Nigerian men. So it was a great summer. Basically, ended up meeting this guy. And this was about the point in my life where I learned that Nigerians are the most convincing people on the face of this planet. Because within about a month and a half of meeting this Nigerian man on the internet, he convinced me to go get a passport and take the first international flight of my life. I'd been on a plane 4 times in my life before starting the company, and land in Lagos, Nigeria on a 6-day-old passport, no visa, no shots, and a one-way ticket that we spent all of our money on. So that's, essentially, sort of how Yellow Card got into it.
That is outrageous. Okay, so these folks that you're speaking to, they were in Nigeria, or they were Nigerians in America?
So the first guy that we met a Nigerian guy at a bank that was trying to send money home, right? And so that was sort of the catalyst. And then, when trying to learn about Nigeria, I just wanted to find Nigerians, right?
That's so funny. That is so funny. I cannot believe that.
Objectively, the internet is the best place to find Nigerian.
That is accurate. I cannot believe that your first international flight was to Lagos. So, I've never been,
real trial by fire, man. That's
yeah, no, that's so I've never lived there, but I lived in Africa for a number of, a year or so, and the Middle East for a number of years. But I've interacted and met with a lot of Nigerians, worked with many Nigerians when I was out there, and they all complain about Lagos. Like, these Nigerians are like, they're tough people, and they're complaining about their city. They're like, man, it's like the craziest city of all time. So the fact that you went there as your first kind of international trip, that's insane. That's insane. But that's incredible. Okay, so you realize you're like, remittance is a big issue. These people are getting essentially shafted on the funds they're sending back home. But also, even if we solve the problem of, hey, let's use Bitcoin to make it cheaper, faster, easier, the issue is, what are they going to do with the Bitcoin when they get there? They have to, transfer it into their own currency. So what was your thought process? Were you like, all right, we're going to solve this big remittance problem, or more so, the remittance problem is solved by Bitcoin, we just need to figure out some sort of company in Nigeria to to translate that Bitcoin into the local currency.
Yeah, I mean, so that's what we ended up landing on, right? I think when we went over it first, the original thought was this is a remittance problem, right? And you need to solve that issue. The reality is that there are 7,000 remittance companies, right? But before I finish this sentence, you can download 6 apps that'll allow you to send money wherever you need in the world pretty much instantly, right? And so it's not so much a access problem as it is the entire system just doesn't work, right? I mean, the way that the remittance industry works, right? Because it hasn't changed since, Western Union started in the 1800s, right? The way that the entire industry works is, these companies send to hundreds of countries, right? And they park money in those countries in inflationary currencies ahead of time to make sure that when Andrew walks into a location or when Andrew downloads that app and wants to send that money, that the recipient gets it instantly. Because the expectation from the market, from the consumer, is that the recipient is going to get that money pretty much instantly. And the only way to do that is to have money sitting there ready to go in, Argentina or, Kenya or wherever it is that money's being sent. And so, this money just sits there, right? It takes, I mean, in some cases, a couple of days for the money to get there in the first place, to exchange into local currency, and then just sits there, right? And the money inflates, the currency value changes, right? And all of that adds up to why the industry is so expensive, right? I think that there's this misconception that, some of these companies are charging outrageous fees or just sort of rolling in profits. And it's just not true in general when you look at the industry, right? And yeah, and stable coins and sort of, I mean, Bitcoin back then, but now stable coins were the first technology that actually enabled that money to move instantly, right? So rather than me having to park money, 2 days, 3 days, 4 days in advance, I can move that money instantly and, do it in real time, right? Andrew needs to send $100 to Kenya. That money can move in real time to Kenya, be liquidated for shilling, and then, move out, right? And so I mean, essentially what we realized is, solving that problem as a remittance company, you're only solving it for the people that you can reach, right? If we work with remittance companies, if we work with banks, we work with, these financial institutions to enable them to use stablecoins, right? To enable them to use blockchain technology, right? Again, I mean, starting with Bitcoin, but now obviously stablecoins, we can, do a lot more to actually improve this industry, right? And to actually change the way that the industry works rather than trying to sort of dive in and do it ourselves. And so that's essentially what we set out to do, is just how do you provide the actual on and off ramps, right? So that's, Bitcoin, stable coins, et cetera, can be utilized in these countries and then actually move, in and out, right? Move into local currency, move into something that actually matters in that local context.
Can you take me back to the early days of when you and Justin were out there, and take me through the product evolution? Because I assume you guys went out there, and back in the day is like mostly Bitcoin and other cryptos as well, but stables like weren't that popular or weren't that large. So take me through the evolution, because I'm sure it was like crypto first, and then stables were added, and then maybe that was a game changer. So can you take me through that evolution?
Yes, yeah. So here's a fun fact for you though. So Justin didn't make the trip. He got pneumonia a few days before. Went to his doctor at Bubba's Medicine Shop in Opelika, Alabama, and he was like, "Doc, tell it to me straight. Can I still go to Nigeria with pneumonia?" And the doctor just looked at him and said, "No." So, yeah, and so we had the guy that's now our CMO came on, I think, 2 days' notice. Called his mom on Mother's Day, told her he's going to Nigeria for a while. So real crazy guy. But yeah, so I think the evolution, right? Like you mentioned, I mean, it started out with just Bitcoin. Right. I mean, yeah, this was, I mean, what, 2018 that, we went over there and started building this. We launched in 2019. And so, I mean, it was just Bitcoin back then. Right. Nobody wanted Ethereum. It was too expensive, the fees and everything. And so it was just Bitcoin that was actually being used to facilitate these transactions. And, when we started out at first, we were just doing the on and off ramping. right? Just pure exchange, right? If I have, you have one Bitcoin, which, back then was a lot less. How do you actually just exchange that, on and off into local currency, right? Into, whatever it is that you need. And so, we were doing, just that essentially, the on and off ramping. We were adding various assets. This is now 2020. We're adding various like crypto assets and everything. Nobody wanted Ethereum because of the fees. There was, very little play on anything else, right? It was, pretty much 100% Bitcoin. And we added USDT as our first stablecoin in 2020. And within 24 hours of adding USDT, we went from, essentially 100% Bitcoin to 70% Bitcoin, 30% USDT. And so it was like, oh crap, we finally, got one that people want, right? Within 4 months, we were 99% USDT. It was just a rapid shift over to stablecoins. And, the more that we started talking to people about, why, right? Why you were buying, thousands of dollars of Bitcoin before, why are you now doing this all in USDT? It became more and more apparent that for pretty much all of these customers, it's a payments use case. And it is a lot easier to make payments in the dollar than it is to make payments in Bitcoin, right? Or any other speculative asset. There's a reason the dollar is used for payments all over the world, right? And so just the more that we talk to people, it's, well, I use this to settle an invoice, right? I use this to import goods from China. I use this to, to pay suppliers, to, send money here, to do this, to do that. And the dollar just makes it significantly easier, right? Having a pegged currency makes it significantly easier to actually facilitate those.
So in those early days, what was the flow like for the customer? Because someone from, let's say, the US would send crypto to someone in Lagos, let's say, and was there like an app that I would just sell my Bitcoin and into the native local currency, which I think is, what's the local currency of Nigeria? I forget the name. Naira. So we would just like, yeah, I could just easily do that turn it into Naira, or would I have to go to like the bank and physically withdraw the Naira? Like, what was that? What did mechanically it look like for the end customer?
Yeah, so from the early days, we've been, linked up with local banking systems, right? Mobile money, local banks, et cetera, depending on the country, obviously. And so in the early days, it was just the app, right? You would download the app, we gave you a wallet, and then you could buy and sell, right? And it was as simple as that. So it was connected to, your bank account, to your mobile money, whatever, put money on, buy, sell, send, spend, do whatever you want. We give you a wallet, and then you could on and off ramp, and that was it. That was all that we were doing. And so, a number of the sort of native payments features and things like that we have now, that all came later, right? But early days, just a wallet and a buy and sell button.
That's awesome. Okay, so a lot of founders talk about achieving product market fit. Like, so it sounds like before you guys had traction, things were moving, and that might have felt like product market fit. But when you added stables, you mentioned business kind of went crazy. And so, like, how was that? Like, what was the vibe like at the company? Were you guys like, oh my god, like we thought we were doing okay, and now like this is what true product market fit feels like, or was it more of a slow, steady ramp up?
It was a bit of a slow, steady ramp up. The big like oh shit moment for us came actually during COVID. So like April of 2020. Um, that was when things like took off, right? And I think with COVID, you had even obviously the lockdown and all of that across the world, but then you also had sort of more issues with payments, with banks, et cetera, than ever before, right? Because the banks are also locked down. The banks are also having all these other issues. And so, that was when people really started looking to this technology, right? Bitcoin at the time, now stablecoins, as, you know, an alternative way of facilitating these international payments, right? And during COVID, we went before COVID, right? Leading up to COVID, we were doing, maybe $1 million a month, right? Which I get, sounds like a lot, but for crypto exchange, that's not a ton, right? Um, And during COVID, I mean, so in the period between like April and May, we went from like $1 million a month to $1 million a day. I mean, within the course of like 30 to 45 days. And it was just like, oh crap, what do we, oh shit, we're like a real company now. We have to we have to do things like, and so that was more the moment of like, oh crap, like product market fit. Like it was already there, but like it just accelerated the adoption curve, right? Um, yeah. And so that more than anything was when that like, it started sparking that. I think that the sort of the evolution into payments came a little bit later, right? And that came more when we started working more with businesses, right? Because at the time, at this point, we were still working with consumers. And for consumers, the payments are typically smaller, right? Typically easier. In a lot of cases, these are small businesses, right? So this is like a guy that, sells shoes or whatever on the side of the road that he's importing from China. And, with smaller payments, we find that it's typically actually easier with smaller payments to make them natively with stablecoins, make them natively with like digital assets, right? Because you can always kind of find a way to do it for, like a couple $1,000. With large businesses, those guys need dollars in a bank account. They don't want stable coins. They don't want Bitcoin. They don't want any of that. They want all the benefits of the tech, right? They understand at this point that, blockchain is more efficient and this is, a better way of moving money around the world and exchanging and all of that. So they want the benefits, but they don't want to have to deal with any of it, right? They don't want to have to set up wallets. They don't want to have to manage keys. They don't want to have to, they don't want to do any of that. And so the sort of evolution into more native payments came a little bit later, more like 2022, which is about the time that we started really diving in on businesses. And, we started just sort of re-exploring, well, what does product market fit look like for a business versus a consumer?
Yeah, so the product suite evolved basically from more remittance focused to now it's like, okay, on the website, I pulled it Treasury and cash management, payments API, international payments. You can also trade crypto. So, like, what problems were you solving for the businesses? Because the consumers obviously they need to send money here and there, but for the businesses, you mentioned that they're buying, I don't know, massive amounts of whatever raw material from, or maybe sending raw material to China or buying products from China or whatever. Could you describe like how your product suite evolved to tackle these different problems that these customers were facing?
Yeah, I mean, so I think the big difference between like businesses and consumers, right? So it's the same use case, right? We solve the same use case. It's just the scale is a lot different, right? With consumers, our average transaction size when we were doing just consumer, which again, I mean, consumer is a strong word. It was in practice more like small businesses, sole proprietors, things like that. Our average transaction size back then was like $500, $600. Our average transaction size now is $800,000, right? And so it's, I mean, just a significantly different scale that these businesses operate at, right? And I think the big thing that we realized is with consumers and look, I don't know about you, I don't want to put words in your mouth, but for me at least, if you just leave me alone like in a room, I'm not sending money internationally that often, right? Like maybe once in a while if I want to, I don't know, buy something in Europe or whatever, right? Businesses are doing this every single day, right? And these guys end up with money stuck all over the world. These guys end up with, cash that they have a hard time converting in a number of countries where there's not, solid liquidity against the dollar, where, SWIFT and the international banking system just were not built for these countries, right? It just wasn't built for emerging markets. It was built for the US. It was built for Europe, right? It wasn't built for, Togo and places like that that go through, several intermediaries before they have their dollars sitting in New York, right? And so, the scale changed pretty significantly. The product suite needed to evolve for business use cases, right? It needed to be, like how do you submit an invoice that can be paid and things like that, right? More than actually changing what we were doing. The underlying plumbing has never really changed, right? We facilitate payments. We use it's the whole stablecoin sandwich that I'm sure you've heard all about, right? And so, the underlying plumbing never really changed. What sort of changed was the way that it's presented, right? And sort of the tools that are available for these businesses to use around it.
Right, so you guys were at $1 million a month, but kind of way back in the day. Can you say how what's your volume today, like a daily volume or even monthly volume?
Oh man, I mean, on any given day, right now we'll do, I mean, 15-ish million of like revenue generating transactions
Per day.
Yeah.
That's incredible. Wow. Okay, so can you because I'm not a payments guy. Like I don't know payments that well, but can you describe the kind of architecture or the flow that companies were using before integrating with you guys? Like, let's say a company in Nigeria is buying some stuff from China. Like as you said, they have money stuck in different accounts, but they want dollars, and it's like neither, China is native currency, not dollars, and same with Nigeria. So, can you just describe to me like that flow of how it worked previously, and then after, how does it work with after integrating Yellow Card?
Yeah, I mean, so look, if you take any country that has historically had liquidity issues on the dollar, it works essentially the same in any of those countries, right? In terms of the old flow, right? So if you're in, let's say, Argentina, right, and you needed to make $1 million payment to China for imports, right? You go to the bank, you fill out a bunch of forms, you go to church, pray to whatever deity you believe in that they actually accept them, and then hopefully you get those dollars. And in a lot of cases, you're just outright denied. If you're in sort of, important categories, right? If you're doing food, if you're doing medicine, if you're doing things like that, typically you still don't get enough dollars, right? I mean, look, we work with, a large food producer that, and, look, some people consider food essential, right? I'm not going to opine on how dollars get divvied up, but, these guys get, historically less than 30% of the dollars that they need to, import ingredients and keep, food flowing to the population from, the banking system. And so for that other 70%, they need to find alternatives, right? And look, before stablecoins, people did essentially hawala, right? I don't know if you're familiar with like hawala, right? But it's, I mean, essentially like Arabic and Indian money movement, right? It's, like I know you and you have an uncle in the UK, so I'm going to give you, money here, and then your uncle's going to sort my guy out, and then everybody's happy, right? And look, I'm sure your uncle's a great guy, right? But I don't think I need to explain why he's not the best way to move $1 million from Uganda to the United Kingdom, right? And so, you sort of end up in this situation where, the companies that need to be able to facilitate these payments often don't get enough access to dollars through the traditional system, right? And they have to find these informal methods. Stablecoins sort of bridge those two options, right? It's a formal method. It's a formal option of being able to move the money that doesn't require pulling money out of the economy, doesn't require pulling money out of the banking system, but still allows large companies the transparency and the sort of compliance tooling and tracking and tracing that they expect. And that's why when you look at, I mean, some of these large companies, that historically have had difficulty operating in these regions, it's because they're not going to go to, your uncle to move their money, right? You have like Johnson and Johnson and companies like this that, have closed down markets across, parts of Africa, parts of like Latin America, which again is not good for anybody, right? It's not good for the consumer. It's not good for the company. It's not good for the country. It's not like nobody wins when, Johnson and Johnson or one of these guys has to leave a country. And again, it's just it always comes down to issues with FX, issues with access to the dollar, issues with moving money, being able to pay bills, things like that. And yeah, and so now stable coins are the first technology that actually provide a company like that the ability to do these transactions formally, right? To properly account for these transactions, to do so in a way that's compliant and above board, and keep their business flowing even when the banking system doesn't have dollars.
Yeah, I have so many more questions around the kind of stable coins and kind of the what does it mean? The end state of where we probably both think stables are going is a totally different world than where we're at today. But I want to get to that shortly. First, I want to talk to you about the expansion within. You started with Nigeria. How did you go on expanding? Because I think you were Africa. You kind of became pretty integrated within Africa, which is a massive, massive, massive place, by the way. And then you expanded to maybe some other countries. So, like, tell me about how did you branch off in different countries, and did you have to make contacts with the local government, local government of Togo or whatever country in order to integrate fully? Or like, tell me about that whole process, because it's a very, very, very difficult thing to do business in Africa, and to do business in Africa in multiple countries in Africa is also extremely hard.
Yeah, I mean, so I think one of the big things that that we realized, and that I mean, I really pushed hard on, especially in the early days, was when you look at fintechs on the continent generally, 90+% in most cases, 99% of their revenue is Nigeria, right? And that's where these guys make all of their money. You name an African fintech that's operating, sort of pan African, guarantee you 90+% of revenue is generally Nigeria. And I think, for us, what we wanted to do was, actually sort of bring this technology to other places, right? I think the big thing that we realized is that, it's, to your point, it's a huge place. There are 54 countries. Nigeria is a large part of it. It's a large economy, all of that, but it's not the only country. It's not the only sort of market opportunity on the continent. And so, I mean, look, we did it. We did it the old-fashioned way, man. We made enough money in Nigeria for me to be able to get a plane ticket down to South Africa. I took a bus to Botswana, got some guy to drive me to Zambia, sort of vagabonded my way across the eastern seaboard, just setting things up country by country, right? And I mean, essentially what we would do is go in and try to make contact with three people. So when I don't know, drive overnight to Zambia, right? When I arrive, we're trying to work with the government, right? Whoever the appropriate regulator is there, whether it's the central bank or if there's another the SEC or whoever, right? The appropriate regulator is in that country. We're making contact with commercial banks, right? Because in order for these transactions to flow, you have to have a way of having and holding the local currency, right? And so that requires working with the commercial banks. And then number three is just people, right? Like business people on the ground, people that are people that have these issues, because the issue is always slightly different country by country. Right. And so it's, what's the issue here, right? If we're in, Zambia, for example, what is the specific issue in Zambia that you're having problems with as a business or as a person, as, whoever you are? And, where does this technology fit in to solve that? Because I think, in a lot of ways, stable coins are the elixir that they're sort of made out to be, but it's not natural. Right. You need to, like, there is work involved in actually, how do you say, shaping stablecoin, facilitating stablecoin flows in whatever the problem statement is. And, there's quite a bit of work that goes on to actually get this technology, sort of in there to be able to then, solve that problem. And yeah, and so I mean that was really the focus, right? Anytime we were going to a new country is, you need to be in touch with the government because you need to be regulated in some way, right? Or to the extent that there is no regulation, then, you need to introduce yourself and make sure that, they know that they can work with you on that regulation, right? And we do this across the board. I mean, we're actively working with, six countries right now on regulation in their country because they're, now finally setting it up, right? And so it's working with the government, it's working within the regulatory framework or working to develop the regulatory framework, and then just working with the businesses, right? Working with the banks, working with the businesses there that actually have these problems on a day-to-day basis.
I mean, that's incredible. Just because my experience, I was in Ethiopia, and the experience of doing business there is extremely difficult. There's just a lot of hurdles and barriers, and oftentimes you need locals there that you're connected with, deeply trust in order to facilitate a lot of business. And so, I'm thinking about your experience where you're going, like, would you go into a country with zero contacts and just like work your way, or would you have some pre-existing contacts there that you can kind of lean on and introduce you to the right people and whatnot? Or how did that work?
I was meeting a lot of guys on the internet, Andrew. That's a lot of hot guys on the internet. It turns out that's so that's yeah. I mean, I would just meet a dude on the internet. He would be like, "Hey, why don't you, come in and like we'll do this here."
That's crazy.
And then I would go into the country. I would find a way to get there, right? Typically, some sort of vagabond mode of actually getting to the country.
That's hilarious.
We would go set it up. We would just drive around. We'd go to the banks. We'd go to the regulator. Just go talk about Bitcoin, baby.
It's so insane. I love it. Okay, so like, was your pitch, hey guys, we're going to save you time and money, or hey, we won't save you money, but we're going to save you a lot of time, or like what was the pitch to get them to be like, oh, this is actually compelling. I like what Chris is building here.
So yeah, the pitch has evolved quite a bit, right? So I mean, it depends on the use case, right? In those early days, we were just pitching the benefits of this technology broadly, right? This enables transactions to flow regardless of dollar liquidity, regardless of anything else. This enables the economy to continue to function without you as a government, you as a bank having to give up your dollars, which is great, right? That's super powerful, super beneficial. Now it really depends, right? Because the thing is that, again, going back to what I was saying, where it's like it sort of is an elixir, but there's a lot of work that is involved in getting it there. There's so many problems that this technology solves that it really just depends what it is that you're going for, right? I mean, so now we work with banks, we work with financial institutions, we work with remittance companies, and all these guys that are all looking for something different, right? You have banks that want to set up savings accounts, right, and want to help people save and earn interest and things like that. It's like, well, great, stable coins are a great option for that. So is Bitcoin, right? If you want to give them essentially risk free, then you put it in stable coins. You're earning treasury yields, right, at a risk free rate. If you want if you're a little bit higher risk, higher reward, then put it in Bitcoin, right? Which is, I mean, essentially the equivalent of putting it in the stock market. And so that's one piece of it, right? And then there's just companies that need to settle invoices. And hey, we're having issues with these international payments. We're having issues on these corridors. What can you guys do to help? And again, this is where that technology comes in, is we're able to do quite a bit to help with facilitating those payments that otherwise the banking system just isn't able to facilitate, or it takes significantly longer, right? And so it varies by country, varies by use case. Some countries it's a time save. Some countries it's a, do you want to move it or not?
Yeah. So how are you balancing, like as a founder, how are you balancing the, because customers are always going to want more, and for you to expand, but oftentimes it's like, hey, we don't want to do 100 different things. We need to do our core 10 or whatever. So how do you balance solving all these different problems versus tripling down on what's actually working and making you the most money?
Yeah, so I think that's really the beauty of the infrastructure that we built, right? So the way that I think about our infrastructure, and the way that the way that we present it, right, is it's essentially a bunch of Legos. You can kind of build whatever you want with the Legos. And it's quite rare that we need to build new Legos at this point, right? Because we built a lot of the Legos. And so, the stuff that we think about from like customers want more and expansion and all that is just building new Legos. So that's what the engineering team works on, is just how do you add additional net new functionality. But from like a sales perspective, going around, the Legos we have solve most of the issues out there, right? From like a financial standpoint, from a money movement standpoint, from an infrastructure standpoint, all of that. And so it's not necessarily the tech that changes, right? It's just the way that you present it. So, again, if a bank is interested in a savings account, then you show them, well, hey, look, with our infrastructure, this is how you could set that up, right? If somebody is interested in, hey, I need to make a bunch of invoice payments, right? Well, that's great. Same infrastructure. This is how you do it. And so it's less about sort of building something that's net new for every customer demand. It's more about making sure that you build originally in a scalable way. Because to your point, customers always want new stuff, right? There's always a new use case that we've never thought of, we've never heard of that comes up. I mean, even recently we had, it's like, hey, how do we just accept stable coins from our customers? Right. And it's like, I mean, that seems simple enough, but it's not, it's not something that we've ever really pitched before, right? Because we're more focused on like the payments aspect and sort of the, the on and off ramping and all of that. And then, I mean, this one bank was like, we just want to be able to like accept stable coins. And so it's, well, great, great. Our infrastructure does that. This is how you would do that using our infrastructure, right? And so it's, I mean, I think the most important thing is starting out with something that's extremely versatile, and then narrowing the pitch rather than having to continuously build. If you start too narrow from an infrastructure standpoint, you end up having to build for every customer, and that's just not sustainable.
How are you thinking about or how heavy of a lift is the integration with these companies? Are they like, when you present your product suite, are they like, man, we want it all, but they do more homework and like it's going to take a year for us to integrate this into our systems, or is it really simple? Like how is that? How does that look?
We give, I mean, the whole range, right? I mean, look, you can set it up where, you essentially just point to our server, and then I can go to, I don't know, payments.red.com, and you have a fully white labeled solution, right? That took, I mean, essentially no time to set up, right? Where your customer can come on and they can facilitate these payments and things like that. And then we go, I mean, all the way down to just you can do a full API integration, right? And you can build this natively into your flows, into your backend, into your systems, into your accounting system, into your reconciliation, whatever. And so it really just depends. Again, it's I mean, the best way to think about sort of the tech that we build is it's sort of a choose your own adventure, right? It's hey, this is we do a lot of stuff on stable coins. We're the ones that have all the payment rails and emerging markets and all this that you can utilize. What do you want to do with it? Right? Do you want to enable people to save? Is it like a simple on and off ramp? Do you want to enable people to pay money to China, right? We do, we can do CNY, right? So it depends on, it depends again on just what it is that the customer needs, right? And I will say that, I mean, the benefit of working with businesses now, right, is I mean, we work with, look, on a good month, we'll have a couple of hundred businesses that join the pipeline, right? I mean, so it's just a much different scale than consumers, right? Consumers, a couple hundred people join, the company's going under, right? That's a very bad month, right? Businesses, you get a couple hundred businesses, large businesses, the scale that we're operating on, it's like, oh shit, this is great. And so, yeah, I mean, it just depends, right? I mean, the benefit of working with businesses though is that you can give more attention to each customer to help them work through that integration process, right? Work through that process of how do you actually integrate this into the payment flows and everything that we're doing today.
Is there a specific product that, or sub product that you have that is killing it and very successful? And is there another product that is not very successful yet, or like kind of newish or still growing, that you're like, oh, that's gonna be a monster in like 2 years or whatever?
Yeah, so I mean, the treasury management one is extremely popular, and that is, I mean, frankly, that's usually the how do you say, like the um like the stake or whatever that you use to sort of drive yourself in, right? And then you kind of open the door and get them using everything else. But I mean, the treasury management one is a big one, right? Because these large companies, I mean, look, these guys are not in the business of treasury management, right? These guys are in the business of whatever it is that they do. I mean, anything from selling food to, I don't know, working with pharmacies or, I mean, even financial institutions, right? These guys are just not in the business of treasury management. And so they end up with so many issues, especially across emerging markets that, we're able to come in and just, help solve. Right. And so I mean, that's usually the easiest sell is like, hey, do you have a lot of money in, country ABC? Do you want it somewhere else? Simple enough, right? If the answer is yes, then we're in business, right? So that one is, it's typically the easiest conversation. It's the shortest sales cycle for sure. And so it's just much easier. I think um, the product that we have that's newer, newest really, which again, it's the same core infrastructure. It's just sort of a new way of presenting it, is the infrastructure for banks, right? So, we have just institutional grade tech that, again, previously a lot of remittance companies, a lot of financial institutions, all of that. We started getting banks coming on and working with us, and we realized, there's a huge opportunity here, especially as like JP Morgan and Bank of America, and these guys are getting into the space. Every bank on earth now has to be thinking about this technology, right? Look, I've gotten calls from CEOs of two of the most prominent, banking operations in emerging markets just within the last couple of days, right? Just cold calls. And so it's, everybody is starting to think about this technology. Every bank either has a plan, is desperately scrambling to make a plan, or is lying about it, because they are all thinking about this stuff. You can't, when JP Morgan announces a token for digital dollar settlements, you as a bank cannot just sit idly by and say, oh, what do they know? They're only the largest bank in the world, right? What do they know that I know? And so, now as you've seen more progression in the US and with Genius and all of that, these banks are getting quite aggressive on how do they implement this technology quickly to be ready to go.
Yeah. So there's a lot of things we can go from there, but moat, like how can you build a moat if there's all these other players that are getting involved in this world? It sounds like you were very early to these emerging markets and you're providing this full suite of products. But how do you think about building a moat within for Yellow Card?
Yeah, look, I think the grand irony in a lot of what we do is we've made it significantly easier for other companies to be able to come up in these countries, right? Because we're the ones that go in and look, there was no licensing in any of these countries before we came around and worked with these countries, worked with the appropriate regulators to develop the licensing regimes. And in most cases, we were the sort of the guinea pigs, right, going through. And so, for us, I think that, clearing a path from a regulatory landscape is more important to our growth and to the growth of the industry than the sort of regulatory capture that you see going on in other parts of the world, right? And so I think that's always something that we firmly believed, is at the end of the day, like, we want this industry to be successful because this industry is going to impact a lot of people. It's going to change a lot of people's lives for the better, more than just Yellow Card alone will be able to reach. Right. And so, look, I have no problem with other people, coming into the market and operating, as long as they're, playing by the rules and playing fair. Frankly, though, the biggest moat that we have is the countries that we operate in. Right. You can basically go to the UN's Ease of Doing Business Index, sorted in reverse order. That's like all of the countries we operate in, right? So that's a huge moat in and of itself, right? And that's why typically you see a lot of these companies that are coming up work with us in these markets, right? Especially in Africa, they're working with us rather than typically trying to build it themselves. So that's certainly a piece of it. The other piece of it is, from a competition standpoint, the other piece of it is, I completely lost my train of thought.
We can go back to that. We can go back to the competition. But so, what do you think about the? Yeah, like 5 years from now, like every 10 years from now, where's Yellow Card? Because I feel like despite you being in so many countries, despite you having this coverage, it's like we're scratching the surface here, which is really exciting, And I would imagine that you would be a very attractive acquisition target for a number of very large players, whether it be a tech company, whether it be a bank, whether it be a fintech, who knows. So like, what is the or go public, right? Like, so what in your opinion, like, what is a 5-10 year vision for Yellow Card?
Yeah, I mean, look, I think I mean, we've had offers, right? We've had stuff come through, all of that, and I mean, especially recently, right? Interest heated up quite a bit. The way that I see it though is you don't build a company to get acquired, right? You can't, because I mean that like an acquisition requires another party, right? And so there's no actual control over outcome with like an acquisition. You need to build a company to build a successful company that can go public one day, that can, live on its own in the public markets. And so I think, I mean, for us, that's always been sort of the drive, and that's always been what we built towards is how do you build something that, can stand alone in the public markets, that doesn't need to be acquired to sort of survive, right? Which obviously there are a lot of tech companies that just need to be acquired, right? And that's the only way that they continue on. So now, look, I mean, somebody comes to me with, I mean, look, I'm human too, right? Somebody comes to me with the right amount of money, and all of a sudden, public markets sound terrible. But I think in the absence of that, right? We tell people, we're not generally for sale, right? I mean, we're having too much fun. I don't know what I'd do with the money anyway. What the hell would I do with that, right? Just start another company, I guess. And so, having too much fun. The market is just too hot. I mean, it's just too exciting. Everything that's going on with stablecoins. And so, we're going to keep building until somebody tells us to stop.
Amazing. All right. So, this future that you and I are very bullish on and know it's coming, what does that look like? When the whole world's payments infra, or money infra, we can even call it, is running on blockchain-based rails and stable coins or whatever, like, what is the end state of that? Are fintechs and banks and these other players going to play a much smaller role because everything's just so much more efficient and lighter weight? Or like, yeah, I just can't. It's hard for me to think of like the second and third order effects of a world where transactions globally are like cheap and easy.
Yeah. I mean, I think it's really difficult to actually talk about the trickle down impact of this technology, right? Because what is the impact of, you know, I don't know, a family being able to send their daughter to like a good school in the UK because they're able to actually make the payment, whereas before they had an issue just even making the tuition payments, like not because of lack of money, but because of lack of rails and being able to facilitate that. What's the impact on like that family? What's the impact on that country when that person comes back now with a UK education and is able to contribute to the economy and start a business of their own and hire and grow and all of that, right? And so just the number of things that smooth payments unlock around the world, it's impossible to, you can go down so many rabbit holes of what that actually means. I think, look, the way that I see it is you will have different winners in different geographies. So I think that in the US, for example, I don't think that there is really much room for fintechs and for really companies in the space to be able to come in and win on payments. Right. The thing that I always say is, look, I mean, some people don't like to hear. You asked about like, controversial opinion. My controversial opinion is that I've sent money to Europe before, and it's not actually that hard. Like it works kind of fine, right? And you're always going to get a better rate moving dollars to euro through like JP Morgan than you will through any fintech that could come up, regardless of how they're doing it on the back end, right? Using stable coins or anything else. And that's just because these markets are already very efficient. And so I do firmly believe that within 10 years, international wires are going to cease to exist. And that JP Morgan and like these banks are going to upgrade their infrastructure completely to use stable coins for the underlying technology because it is more efficient as an underlying technology. But what I don't necessarily see happening is somebody being able to come in and compete with JP Morgan on
dollar to euro, right? That I don't necessarily subscribe to. I think that it's a lot different though in other markets, right? In markets where the banks are not able to facilitate these transactions yesterday, a lot of the markets that like we play in, et cetera, that's where you will have, even more dominant fintechs than you have today. And I think you're already starting to see that, right? Because again, these payment rails and this infrastructure needs to be upgraded. The banks, the banks are not going to be able to do it themselves, right? They're going to need to work with us, work with others to be able to do it. JP Morgan will do this stuff themselves 100%. They have the team, they have the talent, they have the resources. It's in the US, they're doing dollar to euro, things like that. So it's easy. For emerging markets, for emerging market currencies, for all of that, it's just a much different market, right? And so I don't think that the banks will be able to do it themselves. They'll need to work with companies like us to be able to actually facilitate those transactions. And so you'll see a lot of fintech winners in sort of markets outside of the US and Europe. I think in the US and Europe, generally, this stuff will aggregate to the banks.
Wow. Okay. So before the closing questions, I want to ask about the dollar because, you're talking about like, the impacts of if people are using stables and this blockchain infra to make everything faster and easier, more efficient. Like number one, like GDP just should, in theory, expand like globally. If ease of doing business increases massively across the globe, and like in theory, GDP will go up, which is huge for everybody. But what happens to, I feel like the dollar, like the kind of what's being built now is a Trojan horse for like dollar dominance globally, and it's not like a spooky thing. It's not a bad thing. It's just like I think it's actually probably pretty good for most countries. But what do you think about like that scenario where a huge portion of the world has this ready access to dollars, and what does that mean? Because in that scenario, I'm thinking like, okay, that's good, right? Broadly speaking, but alternatively, governments or the U.S. government could be kind of a little I don't know, more irresponsible potentially with spending and whatnot, because they're like, well, even more people are using the dollar now, so we can get even more crazy. Like, so I see pros to the world.
No,
like maybe
they wouldn't do that.
Yeah, you
They
never
wouldn't
know.
print $8 trillion.
Right. No, so like it's like great for the world, maybe bad for the U.S. in some weird sense, because it's like, hey, we're so integrated, like we can be even crazy, like even crazier than we were.
Yeah, I mean, look, what I would say is, the dollar is already the dominant currency.
That's true.
Right. So, I mean, like, there's no impending dollar dominance because the dollar is already there. Right. I mean, look, I tell everyone there's two things in this world that are both universally valued and universally recognizable. And that's $100 US bill and a bottle of Johnny Walker Black Label. That's it. Those are the only two things that can get you out of any situation you can find yourself in anywhere in the world. And so, I think what stablecoins are doing is not dollarizing countries, right? To the extent that a country is going to dollarize, it's not going to happen just because of stablecoins or because the dollar exists, right? It happens for other reasons. It happens for hyperinflation reasons. It happens for, various reasons, especially, for examples that we've seen recently. And so I don't see, we don't see stablecoins dollarizing these economies. We just don't see that happening in practice. What is happening in practice is stablecoins are changing the way that people interact with the dollar. So people are interacting with the dollar the same way that they were interacting with the dollar before. This is making it significantly more efficient. This is making it easier. This is making those transactions more open. Right. This is, to your point about expanding global GDP. That's what's going on. It's not changing the the currency structure of the economy or the country, but it's making it so that the international transactions that already run on dollar by necessity are much easier to facilitate. And so it's, you're not. I don't think you're going to end up in a world where local currencies go away. I think you're going to end up in a world where, the dollar essentially just exists on chain, right? And you end up in this world where the dollar, isn't subject to just, to having a New York bank, right? The dollar is not subject to you being able to get an account with Citibank to be able to move correspondent transactions. anybody anywhere in the world will be able to have, hold, spend, send, receive dollars very easily, convert that into their local economy, and continue business, and then vice versa. So I think this will, to your point, what this will do is it will expand global GDP. It will open up global business, right, in a way that just hasn't been before. It'll make things significantly more efficient, and it'll revolutionize the way that the dollar is used around the world, and it will cement the dollar for a while. It will continue to cement the dollar as like the global reserve currency. But to your point, that is tingent on the U.S. government not getting any crazy ideas.
Amazing. Chris, this has been incredible. It is time for the closing questions. All right. If you could instantly master any new skill to help you in business, what would it be?
I would want to speak every language in the world. I speak 0.75 languages. I'm still working on English. We are not quite there yet. I want to be able to speak every language. That would be like being able to pick that up.
Don't you think it's coming soon with like AI glasses or any sort of? I've seen some of those online. I don't know how good they are, but
maybe. I mean, like there's just there's nothing that can replace like being able to go somewhere, talk to somebody in their local language, and like go out and get a beer with them. Like that's how business actually gets done, right? I mean, like you can go in and talk in English and whatever, but you won't really connect, right, the way that you can if you're speaking the local language. And so, yeah, I mean, look, I think that like with AI, you will eventually get to the point where languages don't matter as much and sort of everything almost happens in real time, right? Like I'll be speaking and you have an earpiece and you're hearing me in, French or whatever. I don't know how, I'm not the expert. I don't know how close or far we are from that technology. That sounds insanely complicated to get it to the point where it's like a native conversation. But I think certainly that will happen. And then at some point we'll all just be sort of grunting at each other like apes.
Yeah.
And the AI is picking up what we mean.
Yeah. All right. What is one unpopular opinion that you hold about startups or building companies?
One unpopular opinion that I have is that there are a lot of companies out there that early on should probably merge. I think that there are, like, outside of the US, or in the US, there's an active M&A market, right? Outside of that, there's not a lot of M&A that goes on in other parts of the world unless you get to, to a, like, how do you say, pretty large scale, right? And so, there's a lot of M&A in like Europe, but it's all happening at like the couple $100 million range, right? You're just not seeing as much activity for smaller transactions. And so, yeah, I think that there are a lot of companies that are starting out where, like, I get it. Everybody wants to do their own thing and all that, but a lot of these companies are doing the same stuff and would in theory benefit from everybody sort of joining forces. You'd rather have a small piece of something big than a large piece of something small, right? That's so I think, I think that advice is mostly geared towards emerging markets and towards the stuff that we see in like parts of Africa, South America, Southeast Asia, places like that. But like in those markets, like unless you hit it big, there's probably not an outcome for you, right? There's just not. A lot of these smaller startups, we just don't see it in most places, right? Where smaller startups get scooped up by the larger ones, right? Whereas it happens all the time in like the US and places like that. And so I think, combining forces is the underrated way of actually sort of getting to one of those outcomes.
Interesting. I wonder if there's a compelling PE opportunity within that, what you're talking about there.
I think there certainly is, right? And we've seen people look at stuff like that before. We're starting to see more sort of like what would traditionally be VC funds that are buying stakes, like larger stakes, or even buying the entirety of the companies in some of these markets, right, for smaller companies. And so I think that there's probably like a PE hedge fund hybrid type situation that will do well in some of these markets because there's just so many targets, right? And a lot of these guys, I mean, look, we see it all the time where, a company raises some money, never really makes it to Series A, and they just end up sort of going under. Nobody really buys them. Nobody wants sort of the skeleton or anything like that. And so it's like, man, join forces, do it together. Two heads is better than one. Yeah, all that.
That's awesome. All right. Is there a belief that you held strongly at the start of your journey that you've since changed your mind about?
I mean, I think the only thing that I've really changed my opinion on is, I also was in the camp of like, oh, remittance companies suck. Like these guys are all just taking the piss, like, whatever. I mean, it's tough. It's not an easy industry to serve, right? And there's a lot of expenses related to a transaction that people don't understand. And so I think, you hear about, like exorbitant costs, but again, it's just not that in practice isn't really a thing. It's just an expensive transaction to facilitate, right? Especially to emerging markets. I think the other one that's a little bit more controversial is that financial inclusion is kind of a myth. I think you had this run of startups. You don't really see this anymore, but you had this run of startups where all they were doing is talking about like financial inclusion, right? And their pitch was like, we're gonna go include everybody. Banks have already kind of done that, right? Banks, mobile money, like other mobile payments, like they've largely done that. Pretty much everybody is included at this point in like the broader financial ecosystem. In most cases, the unbanked that you hear about, in practice, they don't want a bank account or they don't have enough money for a bank account, right? They're living off of, like a small amount of money where there's just nothing in it for the bank, right? For them to be, if somebody makes, $1 a day, it doesn't make sense to bank them. And so I think that like, yeah, the big thing that I've changed my mind on is that like financial inclusion isn't the problem, right? There is still a poverty issue in a lot of places, right? Where people just don't have enough money, and that's, a totally separate issue that needs to be solved one way or the other. But it's not a financial inclusion issue. Like putting a bank in, some rural part of like, some emerging market where there's, a high unbanked population does not solve the problem. And the reason that we know that is because these banks have branches in a lot of these areas, right? I mean, you have to get pretty remote to not be near a bank at this point, right? In pretty much any country, or to not have access to like a mobile money agent or something like that. It's less of a financial inclusion issue, more of a poverty issue when you see like unbanked numbers in a lot of these places.
Makes sense. All right, last one. What does entrepreneurship tell you about people?
Oh man, trust but verify.
Trust but verify. Wait, tell me more.
Trust but verify, man. I mean, I think there are a lot of really good salespeople out there. There are a lot of really good salespeople, and that extends to all parts of life, right? I mean, being a good sales guy, it's it's not just in business, right? I mean, it's look, I mean, there are salespeople in relationships. There are salespeople in every facet of life that you can think of, right? It's not just business. And if you meet a salesperson, they will sell you the world, right? That's their job. These guys go out and they sell the world. And so I think like that is, look, man, I can't tell you how many times we have been sold a product or, some type of integration or whatever that just doesn't work. Right. I mean, like, my God, you want to talk about like, why do payments still suck in some parts of the world? It's because we've worked with like every provider locally. They all suck. And, they'll sell you the world. But I mean, in a lot of cases, the tech just doesn't stand up. And so, yeah, I mean, like, man, that's what is entrepreneurship taught me? You need to verify the tech, man. That's the tech is the single source of truth. go and verify it. And again, that extends to other parts of life too. That extends to, to personal, that extends to family, that extends to relationships, it extends to, pretty much everything, right? There's always salespeople that, so you always need to verify what you're buying, right?
I love that. All right, Chris, this was incredible. Where can people learn more about Yellow Card and yourself?
Man, we are all over. Social media, yellowcard.io. I'm just at Chris Maurice on pretty much everything. That's you can come watch me just talk about stablecoins. That's all I do all day. I don't really have anything else going on. Don't really have hobbies.
I love it. Love it, Chris. Thank you, man. I appreciate it.
It's so good to see you, man. Appreciate the time.